April 14th, 2025. It was a wild ride for U.S. and international indexes last week, driven by fluctuating trade tensions that sparked significant intraday swings, right? The S&P 500 added 5.73%, the NASDAQ rose 7.3%, and the Dow Jones rose 4.97%. International developed MSCI or EAFE added 0.84%, while emerging markets lost 3.82%. Bond markets were under pressure as the yield on the 10-year Treasury surged from around 4% at the start of the week to about 4.47% by Friday, dragging the aggregate bond index, or the AGG, down 2.5% for the week, right? Gold continued its upward momentum, rising for the fifth week in the past 6 weeks. It's pretty amazing. The precious metal is now up 22% so far this year. The S&P 500 came close to entering a bear market, falling as much as 19% from its highs before rebounding sharply to close the week at 12.7% below the February peak. Now, investors endured a pretty volatile 2 weeks of the most intense volatility that we've seen, let's say, in about 5 years. Last week included one of the worst daily declines since March 2020, followed by a powerful rebound, marking one of the biggest single-day gains since 2008. On an economic front, investors gained fresh perspective on inflation. The Consumer Price Index, or the CPI, rose 2.4% in March, down from 2.8% in February, its lowest annual increase in 4 years. Now, let's talk economic releases. This week's key economic release will provide insights into our consumer spending and our industrial protections, both retail sales data and industrial protection and utilization. This is set to be released on Wednesday, April 16th. Then we kind of shift gears into our market outlook. Retaliation, escalation, and negotiation, right? These have been those dominant themes capturing investor attention in the recent weeks. Major U.S. and international markets experienced some of the most dramatic daily swings in decades, as the headlines kind of like went back and forth and they moved rapidly. Amid the noise, it's easy to overlook that Q1 2025 earnings season has officially begun. Kicking these things off, several major banks reported results last week, most of them beating expectations despite ongoing concerns of these like economic headwinds. Overall, though, the consensus estimates projected S&P 500 earnings growth of around 7.3% for the first quarter. If realized, would mark the 7th straight quarter of year-over-year earnings growth. Throughout this earnings season, investors will be closely watching for commentary on how companies are navigating tariff-related uncertainty, particularly its impact on its capital expenditures or its supply chains, and any other guidance they could specifically get to protect their customers and their product. So on April 18th, this Friday, U.S. markets will be closed in observation of Good Friday. So recent activity, not a ton that we could hop into there, but let's talk stocks in the news. JP Morgan, or JPM, reported an earnings beat on Friday. Shares rose 4.5% in the news. CEO Jamie Dimon cautioned that the U.S. economy could face considerable turbulence amid tariffs and trade tensions and kind of a back and forth scenario. Then we have Morgan Stanley, MS. Shares rose 1.9% after earnings came in better than expected. And investment banking revenue was up 8% for the quarter. That's your week in review. I'll see you next time.